Hello guys, welcome to my YouTube channel YOURS Agri Corner. Today in this session I am going to discuss with you some important banking related terms and basics related to banking from where we can expect few questions. I hope you all watched the madam previous video, and I hope you are all liking those videos. From your comments I can see in the comment section some persons are really liking this video, and I am requesting madam also to take another sessions, and whatever possible from the madam side she will try to take all the sessions. Okay, I hope you are really watching those videos and it is really helpful for you from the exam point of view. Whatever you are, I am trying to giving you the content from the maximum effort so that it will reach to you and it will boost up your confidence, and you can face the practical scenario and you can perform very well in the exam. This is my intention, and your selection is very much foremost thing that is always coming to my mind. So I hope you all are really preparing hard for the interview, and you will get the success very soon. So let's start this banking scenario, because you can expect questions related to banking also, banking terminology, some basics related to banking. Here my intention always is to give you the basic fundamental. If you are very much strong, then you can answer it very well. As madam also clarified, that thing is that you can speak in any way, okay, any language is not an issue. While I was also conversing with madam, she told me that she is already having some 2 to 3 interview experience, so she told that no sir, if you are really able to know this content, you can really able to tell them properly. And I hope these things, few doubts also I told to madam that whatever the doubts, you please clarify them, because candidates are asking me continuously, and I don't want any candidate should have any doubt in their mind, and they should go ahead for the preparation. Already I know you very well, so this session also you are asking me regarding what are the questions that is usually can be asked from from banking point of view. So we will see what are the very normal questions that can be asked, but you should know this terminology very well. So first question is, what is repo rate and reverse repo rate? This is very normal. I hope you all know what is bank, what is banking, so I will not go related to those type of things, because within the stipulated time I need to cover a lot of things. So I will cover those technical terms only, so that you can have a good idea. So what is repo rate and reverse repo rate? So these are the very important term, and obviously in often time you can see in news also, reverse repo rate increased or decreased, repo rate increased or changed, it is unchanged. So this type of questions you usually get in the interview also. What is those things? Why this type of questions usually asked? From interview panel also, from normal banker also, you need to know that banking is the interest rate is the main part of the bank. From interest only the bank acquires its money, profit, everything. So this is governed by the RBI interest rate. Okay, interest rate is governed by the RBI. So in what terms they are governing? Through the two monetary tools, that is repo rate, reverse repo rate. So accordingly the bank maintains its interest, okay, and they get the charge out of the customers. Okay, so here we'll see what is repo rate, what type of answer you can give. Whenever they are asking any banking term, if you are knowing, please tell them the definition. First your answer should start with the definition. Then you if you are not able to, you are forgetting whatever you are read in your local language, if you understand those things, you can able to tell them properly. So here I will tell you what is repo rate. The rate, it is a rate, okay, the rate at which Reserve Bank of India lends money to the commercial bank or any financial institutions. Okay, it is a rate at which Reserve Bank of India lends money to the commercial bank or any financial institutions. So this is called against their government securities. No one will going to give you money like that. They will take some securities. So bank has to place some security to the Reserve Bank of India. Then Reserve Bank of India will give the sanctioned money to the to the banks. So this is called repo rate. Now another term is reverse repo rate, that is reverse repo rate. In certain scenario in the economy, what happens, government also requires some money, fund, So from where they will get from the bank itself. So they will approach to the bank. So whatever, now sometimes bank also lend money to the what? Reserve Bank of India. So at that point of time, the rate at which the bank lends money to the Reserve Bank of India, that is called reverse repo rate. So this is just the reverse of the repo rate. Here RBI giving money to the what? Banks, but here banks giving money to the government or RBI. So this is called reverse repo rate. I hope till now it is clear. Now some conceptual questions can be asked on this. If reverse repo rate is increased, if repo rate is increased or decreased, what will happen to the economy? What will happen to the interest rate? See friends, you should be very much clear regarding this concept. When reverse repo rate is increasing, means the RBI increased the rate of interest that amount to be lent to the what? Bank. So now the reverse repo rate is increased, means suppose 5 rupees it was earlier charging, now it is charging 8 rupees interest that to be lent by the commercial bank to the what? That amount to be paid to the Reserve Bank of India. So now what happened in this scenario? The interest rates increase means now that bank is not having that much money fund to with themselves, means bank is not having that much fund now, because they have to give more fund. Now when you are buying, a simple example I am saying you, when you are purchasing some articles, some vegetables from the market, suppose the cost of the potato is 20 rupees earlier, now it is costing 50 rupees to you. So now whatever left amount, that is called disposable income, that is very less with you. Okay, that is very less with you, means earlier you are spending for purchasing the same article for 20 rupees, now you are spending 50 rupees. So you can imagine it is going from your savings only. Okay, that you can able to utilize in other sectors. So from instead of utilizing to other sector, now you have to give it to that vegetable person. So same example is that when RBI is giving money, he is charging more, means bank has to pay the more amount. From where it will bring from the customer itself. So what will happen? If interest rate is increased, then automatically what? The interest rate in the banking economy also it will be increased, and the money left is very less to the bank. So bank cannot lend that much of amount to the customers, to the in the economy, cannot lend that much amount. That inflow of the amount to the economy decreases. So in this way this happens is because RBI wants to regulate the rate of inflation, like that. Okay, if more money is available with the people, they will spend more. Okay, they will take more loans, money is easily available, then they will spend more. As well as the spike, the commodities prices will also goes in a higher side. So to regulate some as the basic role of the RBI, to regulate the what? Inflation, to control inflation. For that reason repo rate is sometimes increase, sometimes decrease. If it is decrease, on the same hand what will happen? The bank will have more amount with themselves, so they can decrease their interest rate also, so that it will be they can lend more money to the economy. So this is what repo rate and reverse repo rate. Here customer has to pay the interest. Okay, I hope these two scenario is very much clear to you, and any questions can be asked from these two aspects. You can easily answer this question. Okay, I hope it is now clear. Now we will see another point that is very important, that is KYC norms. This is very much important. Every bank has to comply with this KYC norms. If they are not complying, then RBI will charge penalty to those banks. What is KYC? KYC is know your customer. Okay, know your customer. This is very important. Whenever a customer is coming, we should have some data with us. That data can be used in various aspects in future related course of time. It can be used as to know regarding that customer, to check the fraudulent transactions, to know whether he is a genuine person or not, whatever any malicious activities is related. Every data you can get from the bank itself. So this is very important. So know your customer is very important. This is the starting itself. When a customer enters to your bank, when he is approaching for the taking any type of loan or for account opening itself, opening itself, when they are opening, you need to take certain documents from them. These are documents are very important. Those documents I am listing it out. So when they will ask what are the documents required for account opening, you can tell them very well to the interview panel. So these are the Aadhaar proof, passport, ration card, driving license, and passport size photograph is very important and required. But nowadays, scenario, you can see some this type of documents are not required in paper. Okay. So nowadays tab banking and video eKYC, KYC have been started by the various banks, because to attract the customer. Bank is what? To attract the customer, to get high net worth value customers. If all customers will come and they don't have that much time to come to the bank itself. Now you see the condition of the corona, because of corona no one can able to come to the bank, many restrictions happen like that, but we required to give service to the customers. So for that reasons, video eKYC, KYC, next tab banking, everything started by various banks. So this is one of the aspects of the digital banking also. To promote digital banking, tab banking you can say. In that what happened, I am saying you what is tab banking. The person will come, you can approach to the person house, you can go near to the person. Okay, this is one type of doorstep banking also. So what happens in a tab, the every software will be there, and in that you have to take the you have to enter the name and you have to enter the Aadhaar details. Okay, Aadhaar details, then the number in phone number, the OTP will come. There you have to enter the OTP. Then you have to give your biometric thumb. Okay, then you have to give the biometric. After verification of biometric, your account will be open. For that reason, no need of any documentation, means paper, C form, account opening form, no required for all those type of things. Okay, so I hope till now the session is clear to you, and in this way we'll progress and we'll see what are the basics questions we can see from the banking related. Now the point is, what is credit card? Everyone knows what is debit card, but I will tell you what is credit card. Credit card is a payment card. What is credit card? Credit card is nothing but it is a payment card issued to the customers to do payment for purchasing of goods and services. This is usually a card with certain limits. Means suppose one credit card, it is a 1 lakh limit. Suppose it is a credit card of 2 lakh limit, and within that limit you have been allocated some funds so that you can utilize for purchasing of goods, and you have to get some better services. So for that thing you can use the credit card. Okay, and these are given by all banks, and you can avail those things, and this type of answer you have to give. This is a payment card. This is nothing, this is but a payment card that is given to the customers to avail, to purchase some goods and to avail better services. Okay, this is the thing. When they don't have money, if they don't have money, nothing, then they should not come to the bank for availing loan. They can use instantly that prepaid card, that is credit card. They can utilize those card. Okay, so I hope what is credit card, it is clear to you. Next, what is BNA? Okay, so BNA is very important. I think everyone is going to the bank and they have a little bit knowledge regarding BNA also. This is bunch note acceptor. This is bunch note acceptor. What abbreviation is very important for you. You should please note it down, and please you remember this abbreviation, because they can ask what is BNA. Then you can tell them by starting that this is the abbreviation. Sir, what is this? What is the difference between ATM and BNA? You can see in e-corners and in the ATM sections, you can have some machines with BNA as well as ATM. So what is the major difference? So these are the normal genuine questions they can ask, by I hope you can able to answer. That's why I'm starting this with basics only. BNA is usually a machine. It is nothing but it is a machine that accept the cash. It accept the cash. Immediately it verifies the It verifies the cash as well as the customer details, and it will credit to the customer account. So instead of going to the bank itself, the customer can approach directly to that machine and he can deposit cash itself, and immediately the amount will get credited to the customer account. This is called BNA. So what is this important? You should not approach to the bank, you should not stand in the line, your time saving and very effectively your money will be credited to your account. So as you know, time is very important to all of you. You should not waste time. So by approaching a BN also, you can get your amount in your account very fast. Okay, now I will tell you some important question that is related to loan, because when we are becoming a AFO, as I already informed you are going to look after the loan section maximum. So some few questions related to loan also you should remember, because madam, as madam informed, some questions they asked regarding loans also. Different questions they are asking to different candidates. So I hope you should have a basic idea related to every aspects. Here I will tell you what is cash credit and term loan. See friends, these are the two important loan that is very important and that you are going to deal with. So these are the two terms I have picked up to make you understand what is cash credit. Cash credit is nothing but it is a short-term finance. It is short-term finance where the customer has to create the current asset immediately. Means he has to create the asset immediately, or he has to invest those money for purchasing of certain articles or raw materials, we can say. What is that? What is current asset? Means suppose this is important. Why cash credit is important? And because it is KCC. In terms of KCC to crop loans, the loan is sanctioned in the cash credit itself. That is, here the customer, who is the customer? Here the farmer is the customer. When he approaches us, sir, I want a crop loan of 1 lakh rupees. Then what we will tell? Okay, I will give you 1 lakh rupees. I will give you 1 lakh rupees after 1 month. Whether he will stay with you, whether he will come again to the bank? No, he will not, definitely, because he requires the money now itself to purchase the raw material. Why he is approaching? Because now the crop is there, he has to purchase the fertilizer, pesticide, and thereby he has to utilize in the field itself. So he cannot stay with you, or he cannot wait for next 1 month or 2 months like that. So he requires cash fund immediately. For that reason, we have to give the cash credit immediately to that customer. So KCC is the way of mode of lending is cash credit, or we can sometimes we can say working capital. Working capital means to purchase, to meet the labor charges, everything whatever we are lending, that is called working capital, to create the assets immediately. Now the point is, what is term loan? Another aspect is, what is term loan? Term loan is categorically, it is divided into 3 parts, that is short term, medium term and long term loan. What is this is usually on the basis of repayment period. Okay, repayment period. On basis of repayment period, it is categorically divided into 3 types, that is short term, medium term and long term. What is short term? Usually it's the mode of repayment will be 1 year to 18 months. Next, medium term is 2 to 5 years, and more than 5 years it is called long term. So this question has been asked to me only. Tell me what is short term loan, what is medium term loan, like that they asked me. So at that time I used to answer them like that. This period of year is very important. You should not tell them any wrong, or you should at least you can able to tell them the correct answer. Now where a term loan is utilized or used? As you told, sir, working capital for the KCC. Now for this is for financing of the dairy or anything, then we can use what? Term loan. Term loan is for any construction work is there, any purchasing of livestock, all those things we can use what? Term loan. For construction, what is in dairy financing, what are the component from where we have to lend? That is for the construction of the shed. Okay, for construction of the shed means we have to lend in term loan. Next, purchasing of the livestock. Okay, next, for that ongoing expense we can give some working capital also. This is called, when term loan plus working capital is given, it's called composite loan. It is called composite loan. So my point, you should be very clear. Term loan is for purchasing of anything or any construction, housing loan, dairy financing, those things, construction of the shed, everything, purchasing of the for setting up of any industry, that is called you have to you have to give lend in the term loan. Okay, now what now I hope it is clear to you what is term loan and what is cash credit or working capital. Okay, now the point is that what are the cross selling products. They can ask you what are the cross selling products you know, please tell me, or from which bank you have account, any cross selling product they have given to you. If you don't know the cross selling product, you cannot answer those questions. So in my point, you should know what is cross selling products. See friends, banking itself is not doing only, banks not only involved in do the transactions all related. Now they are very much oriented to other aspects also. So whenever you have come across one point, that is bank assurance. Bank assurance means banking plus insurance related. This is called bank assurance. So in that cross selling product, this is called selling of their insurance products. Okay, insurance products means many banks have tie-up with various type of insurance companies, from where they have tie-up and they are selling their insurance product, and from that they are earning a good profit. So these are called cross selling product. If they are asking what is the product, you can say, sir, insurance products are the cross selling products. Okay, like that. Now I will tell you what is current account and what is saving account. Sometimes they used to ask normal basic question, what is current account and saving account, what is the difference? If you don't know, then you cannot able to answer. You will get trapped with the cross questions. So current account and saving account is that saving account, you are usually open the account for our daily transaction. Whatever transaction we are doing, you just think that that account is saving account. Means putting the amount, we have to withdraw some amount in the ATM, we are doing transaction for the POS machines, everything. This is normal day-to-day life transaction is called saving account. Current account is for those who are dealing with business activity. They will require more money, they have to deposit more money, they have to withdraw more money. So for those reasons, they have to maintain one account. That account is called current account. Okay, now it is clear, it is for individual, this is for business purpose. Okay, next is in saving account, the bank is giving some interest to the customers, that is 2.5 to 3%, and it is depend upon the banks, and various rate of interest is there. But in a current account, no such interest rate is given to the customer. So in a saving account you will be get some interest, but in current account you will not get any type of interest. So any individual, those who are having a businessman also, they can open their individual account. Along with that, they have to maintain one current account to do that business purpose related activities. Okay, so I hope this session little bit you have understand regarding some banking terms. Slowly I will progress regarding next topic. I will tell you what is SARFAESI Act and all those things, and why it is important from the banking point of view, because you are going to do recovery. So from recovery point of view, SARFAESI is very, very important. I will tell you brief regarding that. So I hope you enjoyed this session. Please stay tuned. If you have not subscribed my channel, please do subscribe, like, and don't forget to share my channel. Thank you guys. Have a great day. Thank you.